Okay, perfect. We are live now, and I'm happy to start the discussion about derivatives and futures on the panel with Gabriel Zanko, who will moderate this panel. And so we have Ryan Rabaglia from OSL. We also should have Sophie Joe from KuCoin, but so hopefully she will join. So, but we can start the discussion. So, Gabriel, your turn. So, I suggest we can make the short introduction about panelists. So, yourself and Ryan, and then we can follow the discussion.
Yeah, sounds good, Ivan. Thank you for the invite. And yeah, so from my side, my name is Gabriel Zanko. I'm based here in Colombia right now in Bogota. My company right now, we do investment banking. So we focus on raising capital and co-investment for not only blockchain and fintech, but also we have a strong line in renewable energy, cannabis, deep, scientific research that we're trying to fund. And obviously the crypto market blockchain is on the we still observe that, and that's kind of like in a nutshell. Yes. You can go ahead, Ryan.
Ryan, I think you need to unmute your microphone.
Yeah.
Sorry.
No worries.
Rough start. Thanks, Ivan, for the invite. Happy to be here. Great to meet you, Gabriel, as well. I'm Ryan Rabaglia, Global Head of Trading for OSL. OSL is Asia's leading digital asset platform. We're based here in Hong Kong. We've been operating in the space for close to around 7 years now as a group. So what do we actually do? We have 4 pillars to our business. That is brokerage, exchange, custody, and software as a service. We cater to the likes of high net worth individuals and sophisticated professional investors and traders. And those include your family offices, your asset managers, your hedge funds, and whatnot.
That's great. That's great. So I wanted to start, Ryan. Maybe you can guide us a little bit, because this year has been quite insane, with all the situation with the global pandemic, right? So from your perspective in OSL and in the Asian market in general, have you seen very tough issues, difficulties on your company, on the market in general? Like, obviously, it's been so many stuff right now, but I want to see your perspective from Hong Kong, right? Because you're there. Yeah.
Sure. Thanks for the question. So obviously, this year has gotten off to a rough start. I like to call it Bizarro 2020. Obviously things kicked off here early this year, right around Chinese New Year, and they sort of made their way west. So just with my counterparts there in the west, my family there in the west as well, essentially nothing was happening there, and everything was happening here. We're starting to get indications of change very early here. So I think we had a little bit of a leg up here in Asia to sort of get an indicator of what was to come. And admittedly, that put us in a good place to actually prepare for what was to come, considering the wave that was moving in the global direction. But exactly what has it done to the industry as a whole and Hong Kong? Hong Kong is in a good place today. We've cleared things and you could say eradicated the pandemic for the time being, we hope. But as far as the whole crypto industry here, it's extremely strong. Hong Kong's a small place, as you know as well, Ivan, and Asia as a whole as well, particularly Hong Kong and Singapore, which are the sort of the more institutional backbones of the industry. Let's take one of the pillars of our business. So let's say, of course, we're not a prop shop, so we don't take directional risk on trades. We do trade as principal and hedge our trades, of course. So, sort of seeing the last few months unfold and seeing the impact of, the volatility in the market, it has indeed brought some wreckage along with it in other companies, in other funds. And we saw some news come out, particularly in the Western world, of some funds that did not fare too well through that volatility. And I'm speaking of the specific volatility in March, of course, Black Thursday. And not a lot of companies came out too well on that. But funnily enough, when you talk to our counterparts, when you talk to our competitors, we keep our ear to the ground across the globe. It was either one or the other. It was either rain or shine. It was either we had a great, let's say March specifically, we had a great March, or we had a terrible March. And the ones that had a terrible March, usually they don't tell you that because they're not speaking to you. So everyone who sort of took a prudent approach through that time came out of March, in a lot better position. So a lot of the smarter players and like I said, the more prudent ones and the ones that have proper risk management in place, it came out on top through March. And I do think that March was sort of the indicator for the year so far, especially here in Asia. Like I said, we had things pretty slow coming out of the New Year mark. We have Chinese New Year here too. Down. So and then we rolled into February. So you sort of people start waking back up again. But then indeed we had COVID. So I'd say March was a true indicator of whether or not people and firms, investors, traders, and how they're doing for the year. It's almost a watermark right now.
Interesting.
Yep.
No, go ahead. No, I was going to say, and now with the recent halving that happened with Bitcoin, right? A few weeks ago, and obviously the market has been recovering a little bit, although it fall a little bit as well, but it's going on the bullish trend again. I don't want to speculate, but do you see after this halving that things should go back to normal, like nothing much to happen, right, for this year, or not necessarily, right?
Back to normal in what way? What's normal in our industry? But yeah. I'd say overall, there's,
that's back to normal. I mean,
yeah. Sorry, I'm getting a little break up here in the video. I'd say overall, pre-halving, I think everything sort of played out somewhat how people were expecting it to. We had that strength going into it. The previous halvings had that strength before the actual event. They had some sort of muddled type of sell-off afterwards, and then of course we have the increase in price action for months and years afterwards. So I think that's how most of us are looking at it again. I myself was not expecting much on the actual tick of the clock into the halving. I don't see how that. I don't see how that.
Yeah, me too.
To be honest, but pre and post, as far as the impact overall, is where the price action is, and that didn't prove wrong again this year. Although we're in a little bit of a different situation.
Exactly.
We've had a bizarro start to the world, and I think at this point for this halving, we've had we're living in a different era as well, is in the crypto industry. People are supposedly more. We have institutional products now, albeit not massive volumes. We have institutional players entering the market, albeit to a lesser extent and probably in a covert. But I'd say in this era, it's a little bit different than the previous ones where it was just everyone was just a cowboy. So I think there's a lot more prudent nature of the market in an institutional manner. Of course, retail will always be retail. But I do think that this halving has it's a bit of a different ballgame in my opinion.
Yeah, and that's what I was referring to back to normal in the sense, not because crypto market is super unpredictable, right? It's very chaotic in the sense of sentiment and fundamentals, but I was referring, not with a pandemic, right? With this crazy situation we have right now and the mood of the investors. So my question is, how do you see, the mood of the investors, the institutionals you work, the family offices, is the same interest in this market, like same entrance, let's say go inside the market fully, or just because in a way it's been quite resilient, this market in these times. You see stock, New York Stock Exchange crashing, even gold, oil, and even Bitcoin was, quite good at the end. So how do you see the traditional players now, no, in your
Sure.
side?
Yep. So I think there's been a bit more of an eye-opening experience for the world. I don't think anyone would disagree with that. Although equity markets will be equity markets. If there's total V-shaped recovery, then that'll shock the biggest naysayers out there, to think that how is it possible that these markets can rebound so quickly? But indeed, they have practically. So how does that play into the main or core demographic of our counterpart network? Indeed, like I said, it has opened eyes a bit more. And, I think we know, like, this was a sudden change and a sudden experience that that the whole world has sort of grown into. And, even the biggest, strongest players were shocked by what's happened. So, I think these more sophisticated professional investor types that we've been working with for a couple of years now, they, whether they were dipping a toe previously and they were taking their time, this has definitely accelerated their thinking into how to get more exposure and quicker. But at the same time, family offices per se, they're not the fastest movers. And they fall under that category of institutional capital, unless you're a real hotshot investor or trader. You don't go into things too quickly, especially illiquid markets.
That's right. Yeah.
So I'd say it's definitely, just as a blanket statement, it's definitely been a more eye-opening experience for our more sophisticated counterparts. And it's open, like I said, it's given them a bit more guidance on where they think the world's going and what may protect them. And whether they look for Bitcoin for protection, that's debatable. I think a lot of us who've traded this market for quite a while, we know that it could be mean and nasty. So, and they've experienced that. We had a massive sell-off not long ago. We have liquidations happening all the time on derivatives exchanges. They can really give you a kick real quick, and they can teach you a bit about the market. So, like I said, definitely accelerating their thought process around what they believe they need in their portfolios and what they need for their investors or their families. But they're still, they still like to take that, that sort of that calculated, process to get into it.
Yeah. My question would be, because Bitcoin is still quite volatile, right? This market. And I also work with family offices, and they still are not ready. They're very skeptic, or they have one of the representatives trying to play with that, but not in a big way, not for their ticket size. So my question is, if Bitcoin will continue to be volatile, then how the big players will enter fully? What would need to happen? Regulation, ETF. What is the entrance of the big time for them? Because it's still quite small.
Yep, absolutely. So I think twofold. Of course, we could go down the route of the boring discussion of regulation. I think a lot of we've been discussing this for long, but it is important. it is important. I get it, and that is a part of our business plan as well. Is operating in a regulated space, obviously operating in a compliant and regulated manner. So I think twofold then. So
Mhm.
one
Yeah.
is one is waiting for that regulation, waiting for more new products, which we already have some now. We already know CME backed futures and options. We know open interest on both of them have hit all-time highs very recently. So CME we know of course
Yeah.
has experienced a bit of a downtick, but I believe previously all-time high around 500 plus million on CME futures open interest, which is not much when you look at the sort of, let's call it the unregulated exchanges, which are trading billions a day. But
Mhm.
I downtick of around 400 plus million or so on CME futures open interest, backed of course too. Has had some good results as well, although a little bit slower out of the gate. Options open interest at all-time highs as well at some point. So we've seen a few multiples movements on those products. Are those the things that allow those institutions to actually get a bit more comfort? I do believe it helps and assists with them entering the market, with them feeling comfortable with how the market moves and works. Then the second thing, of course, coming back to your point, regulation, insurance, having licensing, being accountable, for services offered, and holding of assets. Will that protect you against volatility? No. Those institutional tools will, though.
Exactly.
Those new institutional products will, though. So I think you look at it two different, on two sides of the coin type of thing. The old vanilla, we need regulation, insurance type of conversation, which everyone's
No.
talking about for quite a while now. And then the other one is
Yeah.
how do you get involved today when the market is a little less saturated, and that is by
Right.
using those products and tools. And
True.
on
Yeah, yeah, that's a good point. I mean, as you say, still volatility is going to be, I mean, that's kind of like the normal in this market. The thing is that you are building products. I mean, explain me more about your products. You purely focus on Bitcoin, or you have all type of digital assets, or mostly Ethereum, XRP, Bitcoin, or or it's purely Bitcoin, right? I ask you because the ones I do work are purely focused on Bitcoin right now.
Sure. Yeah, so admittedly, there's, I think everyone can agree with this, from from brokerages such as ourselves to prop desks to exchanges to funds. You know, all the volume still sits in BTC, and of course USDT if we want to get into stable coins, right?
Definitely.
But
Oh yeah, yeah.
um,
Of course, yeah,
of course,
yeah.
look down the market cap list and sort of compare that versus the volume. There's really nothing exciting happening these days from a volume perspective. It's still the same thing that we've been talking about for
No.
years. It all sits in those ranges. But as far as us, on our OTC desk, we trade 30 to 40 different coins. We trade every stable coin out there. We do lending and borrowing as well. We do over-the-counter options as well. So no, we're not just a vanilla trading desk. I think I'm thankful that we've moved on from that quite a while ago. And I still remember the day when
Yeah.
we added Ethereum to our trading desk, and it was an exciting day. But I think we even had a
Yeah.
press release for it. That's how vanilla the market was. That an Ethereum, we're trading Ethereum press
Yeah.
release wowed the market. But yeah, no, things have changed, of course. And for those exchange operators out there, that list, I don't know, 100 different tokens, and different versus 50 different pairs and 5 different stable coins and different futures and perp swaps, and all these different things. I mean, of course, the market has come a long way, and our desk is no stranger to that. We've been riding the evolution movement with the market as well. So yeah, there's definitely a lot to be played out there for sure.
Yeah, I wanted to touch base on a point, for example, exchanges like, the bigger ones, that we all know, like Binance or these exchanges, do you think obviously will become a monopoly down the line? I mean, they already are in a way, but will kind of like consolidate that monopoly, and the smaller exchanges, the medium exchanges will struggle with the liquidity side, or at the end, everyone will grow in this space because it's so new that at the end, there is a space for everyone. I ask you because I'm in Colombia, and people here at the end, they trade a lot of Bitcoin, USDT, obviously, for the remittance market as well. But at the end, are using the same one or two, three options, right? They're not using the local ones or, the medium ones. So will that change? Will that continue to be like that? The one is big will be bigger, and,
Sure,
the,
sure.
the liquidity side for the medium side will continue to be a struggle, no? Yeah.
Yep.
Yeah, guys, we have a couple of minutes left, so I think like this is the last question. So yeah.
So yeah, I think.
Yeah, go ahead, man.
Yep, I think it's a great question. I think, I previously had thought, that there was going to be this massive, consolidation experiment that went underway. And there were a few things that happened over the last few years that sort of supported that theory of mine. But to be honest, I don't think it's going to happen anytime soon, especially in the derivatives exchange market. We have Schwab, OKX, Binance, of course, BitMEX, one of the originals. But let's just stick with
definitely. Yeah.
Three exchanges, such as Schwab, OKX, Binance. I don't see them consolidating because they all have their own identity. They all, I wouldn't say going to war with each other, but they all believe they have the best product, and they all have great products, and they all have leading volume products. So I don't see how each one of those three in particular are going to give up on their plans, to dominate the market. Each one of them has dominated the market in some way over the last few years in different products. But I don't see how they'll consolidate. Who knows? You can't. Some offers are too good to refuse, of course. But I don't see in particular those three names being the three highest volume, let's call it futures trading exchanges, consolidating. They're all fighting to release new products. They're all fighting for better customer service. They're all, expanding globally into different markets, and it makes the market better for sure. And I would actually hate to see it all become one, because it would hurt the end user in the end.
Right. That's right. That's great, man. All right. Thank you, Ryan.
Fantastic discussion, guys. Yeah. Thank you very much for insights. Yeah. Happy to have you in our event. Okay.
Thank you, guys.
Thank you.
All right.
Thank you, Ryan. Thank you,
Gabriel.
guys.
Enjoy. Bye-bye.